Hi there, I'm Marty Levinson. Welcome to the Northtown News Magazine with the greatest cameraman around, Sonny Hersh, and your host, Avi Meyers.
Avi Meyers, Northtown Neighborhood News Magazine. Check us out on the web, ntnm.org. The show, of course, is a presentation of Sonny Hersh and myself. Big on CAPS, caps24.org. We'll give you all the latest community policing meetings for the Rogers Park, West Rogers Park, and part of Edgewater neighborhoods. For the balance of the city, check out 311. Well, this is a very difficult time economically for tons of people and for the nation in general. And we were called from State Treasurer-elect Giuliani's office, and we have a representative here, Ben Noven, who is the director of the Finally Home program. Ben, how are you? Thank you for coming.
Thank you for having me.
My pleasure. Tell us about the Finally Home program.
Sure. The Finally Home program is a program that was created under Alexi Giuliani back in 8/15, so August of last year, to help low to moderate income families qualify for conventional mortgage financing in either the purchase or refinance of a home. Nowadays, things are extremely difficult if you're trying to buy a home or refinance out of a bad loan into a good one. And so the treasurer is trying to do what he can to help and stimulate the economy.
Which is very important. I mean, it's sad when I walk up and down, and I'm a walker, as people watching the show know, and I see more houses with, a sheriff's notice boarded up, or houses with a, different signs on them. The water's been shut off, the heat's been shut off. People need all the help they can get right now. There's no question about it.
Right. And just a little bit of history on the program. Since the inception of the program, it was actually called Our Own Home and started in 2003. The way that it was formed was we diverted interest from access to capital and took this money, taxpayer dollars, and formed a collateral pool of $5 million. Since then, it's earned interest, and we're now up to $6 million. So off of that, we can guarantee 10% of a loan for 5 years to a financial institution to help them, qualify an individual for an affordable, sustainable mortgage.
Yeah.
We've earned about $1 million in interest, and we've had one loss under the program out of approximately 450. So we've helped 450 families. Only one of those has gone into default where we had to pay out approximately $2,500.
And that's not bad out of 450, especially in today's economy. That's great.
No, I would say, we do not want to see delinquencies, but anytime that you do have, those numbers, you are gonna find some. So one is great, and we actually have put in measures to ensure that these loans are not predatory, that somebody is getting into a responsible, sustainable loan. The first being that these loans must be portfolioed by the lender. So the lender has to originate that loan, and they have to service that loan, meaning that, if you're familiar with a car note, some people will go and purchase a car, and the payment every month will transfer. One month you'll make it to XYZ company. The next month it might be with ABC company. So with this program, once you get a loan, you should be confident knowing that you're going to be making that payment to the same lender over the life of the loan. So they're accountable.
That's cool. I like that. That's cool. I mean, you were explaining to me a little bit before. It's so complicated the way the world works with financing these days.
Right. What we were talking about are the securities and the mortgage-backed securities that Fannie Mae, Freddie Mac held, and how a lot of these products were created, a lot of subprime products, and it's kind of trickled down to hurt the consumer. So I think we were talking about collateralized debt obligation. It was kind of an instrument that was created to keep the flow of mortgages going, and ultimately what it did was separate the origination portion of a loan and the servicing portion of a loan into two. And when you do that and you sell it off to make money, which is understandable, that's how you keep things flowing. But when you do that, it's very difficult to restructure that loan down the road if there's a problem and that borrower needs to do a loan modification. So right now, loan modifications, we're seeing a big push for that in the industry. A lot of people are saying, let's help out borrowers, write down principal, and put them into something that they can't afford now, whereas before, they couldn't. They were put into something that they couldn't afford at the time. So the issue that we're facing now is because these things were separated, the origination and the servicing aspect, you have two different parties with vested interests that you have to get to agree to modify these loans.
I'm trying to follow all this, but
Sure.
hopefully people will follow. I'm
Sure.
not a financial brain, trust me. If you
Right.
saw my bank account, you know exactly why I'm not. How do people connect? How do you connect with people? How do people connect with the treasurer's office? How does that work?
No, I appreciate it. what we've done, because we want to ensure that when you are interested in using this program, we want to make sure that we save your time and vice versa, so you can make your decisions as quickly as possible, but as effectively as possible. So on our website, which is www.treasurer.il.gov, and I'll say it again later.
Which, by the way, I did check out, and it's a pretty good website. It's very user-friendly.
Yeah, we have all kinds of programs up there, actually, for financial education, unclaimed property. The state holds over $1 billion of money that should be returned and will be returned. You just go on there, plug in your name or that of a family member, and if they have money out there, which my mother did, you can claim that money.
Cool. I wish I was that lucky. I did try that. By the way, when I went on the website, I actually did put in my name there.
Well, that means that you know where your money is at, which is a good thing.
Yeah.
But yeah, just go to the website, click on the Finally Home link, and from there you'll have an overview of the program. It'll go over income limits, eligibility requirements, home values, and you can kind of get an idea whether or not you do fit or you don't fit within our program. We still want to help either way, so if you don't fit our criteria, you can then go to our financial education site, and we have a list of resources to help you if you don't fit within the program guidelines. But if you do, and we're hoping that you do, you can then fill out an online borrower pre-qualification checklist. That's what we call it. Basically, it asks for your information to see if you fit within the guidelines. If you do, we'll be able to then respond and provide you with a list of the banks that you can reach out to.
That's interesting. By the way, before I forget, too, I want to thank Ellis Moralis, who's the person that originally contacted me, and she had contacted originally Alana over at Alderman Stone's office, and so I want to thank her for all the work and effort she put into getting this to happen. So, is there a profile of a kind of person in general who? Are you getting like a specific kind of person? Is it a younger crowd? Is it an older crowd? Is it a certain demographic crowd? Is it an income group or? Sure.
We do target the low to moderate income census tract. We use, and I hope this doesn't sound too confusing, but we use 115% of HUD's median family income, depending on the number of people in your household. What that translates to here in Cook County would be roughly $60,000 or so for one person, and it increases depending,
That I understand.
Right. So we got that. The home value cannot be over 100% of Fannie Mae's conforming loan size limit, which basically means for a single family, you're looking at $417,000. Now, just to clarify, it's not a grant. It's a guarantee, just like mortgage insurance, that we offer to financial institutions to help them, ease up a little bit on their guidelines while still being responsible, and act as a credit boost for the borrower. So that's how it trickles down. What we've seen a lot of now, to answer your question, is purchase is definitely increasing, the purchase side of things. The last couple of years, refi madness was going on, and since then, lenders have tightened up their guidelines. What that means is, they're obligated to get mortgage insurance if you don't have 20% down on a home or 20% equity in your home to make up that difference, so that the bank can feel comfortable in going ahead and approving you for a loan. Typically, they want 20% down. You may have heard that, or 20% equity. Well, previously, over the last couple of years, the guidelines have loosened up, and there's these major insurance companies out there that do this. And what they would have as a guideline, maybe you need a credit score of 620 or a 680 to qualify a year or two ago. Now, they've changed that, so you need a 680 or a 720 to qualify to get this insurance, so the bank will give you a loan. So kind of the players that made the rules of the game kind of changed the rules in the middle of the game. So if you were put in an adjustable rate mortgage 2 years ago, and you had a credit score of, say, 660, and you were told that you'll be able to refinance out of that loan, at that time that might have been correct. But now the guidelines have increased or tightened up to where you cannot qualify for that loan. So that's where our program tries to address that on the refinance side. And on the purchase side, you'll see lenders that are looking for, again, a 680 or a 720 credit score not be able to loan to people because they don't have it. Things are tough right now. And so if we can help in a responsible way, that's what we're out to do.
I actually understood what you just said. Thank you.
Good.
I'm not a brain on finance. Those people know I know my history, I know my politics. Finance, you made it understandable. I thank you.
Right.
At this point, we're getting, Nikki's hands are starting to go in that direction. I want to thank very much Ben Noven, the director of the Finally Home program for the state of Illinois. Why don't you give people a website and a phone number if they want to contact the office?
Absolutely. The website is www.treasurer.il.gov. The general line is 1-312-814-1700.
Real good, Ben. Noven, thank you so much for being here. Thank you for educating us.
I appreciate it.
And good luck with the program. It sounds very worthwhile.
Thank you very much.